Good afternoon, everyone. It's Pablo Zuanic, Cannabis Equity Analyst at Zuanic and Associates. I have the pleasure of hosting this fireside chat with the CEO of FLUENT Corp, a four-state MSO, Dave Vautrin. Dave, welcome to our panel here.
Thank you, Pablo. Thank you for having me.
Look, we have a lot to cover, but let's start with an introduction about yourself, your trajectory in the cannabis industry, and tell us a little bit about FLUENT. Thank you.
Sure. For starters, on the personal level, I'm a native New Yorker. I reside here in Manhattan, and I've got three children. Professionally, I've been in the CPG business for about 30 years. I've been in the legal cannabis business since 2016 with Canna Royalty, which we later renamed Origin House. I've held a range of executive roles, served on several boards, led startups, and a bunch of different established businesses. Following the sale of Origin House to Cresco, I was fortunate enough to take some time off. I returned to New York to get involved in the startup of yet another adult use cannabis market. Upon returning to New York, I became an investor and an operating partner in a startup, which we later named the Travel Agency. From there, I was recruited to join Riv Capital to support the opening of multiple co-located retail stores, and then eventually as the interim at Riv Capital. Then we completed the merger with FLUENT Cannabis, and that was at the end of the year. And then following the merger, I became CCO, and then about 8 weeks ago, I became the interim CEO at FLUENT.
Yeah, that's great. Thank you. So after that merger between FLUENT and Riv Capital, the company has a footprint of 4 states, and I believe expanding. But tell us a little bit about the business strategy. You've taken over as CEO. What changes are you making? And in that context, strategy, description about the business for investors out there that see so many MSOs that are publicly listed, what makes FLUENT different from other MSOs?
Sure. So on broad strokes, you're right. Like, we are a cultivator. We have 8 facilities, got well over 100,000 square feet of canopy across Florida, New York, and Texas. We're also a retailer. We have 37 stores across Florida, New York, and Pennsylvania. We have 3 more under construction. And then we are a wholesaler. So those are the 3 buckets when it comes to FLUENT: cultivator, retail, and wholesaler. Service well over 100 retail partners in New York, in the rapidly expanding market in New York. From a strategy standpoint, from changes, I would kind of we're just focusing on the fundamentals, starting with just full alignment on the core strategic initiatives. And that is, we have stack ranked them among the 4 executives. Every single strategic initiative has an executive sponsor. And then we're predominantly focused on 3 things, being customer-centered, and that's through cultivation excellence. And that's not just increasing yield, but increasing the quality of the flower and the flower-derived products, and then also focusing on the guest experience. Number 2, cost cutting, and that cost cutting is being done through a series of actions, one of which is production efficiency, reducing staff redundancies, and quite a few other cost-cutting initiatives that will roll up to be a substantial number. And the third one is just really important to me is driving profitable growth. We are not interested in chasing top-line growth. This is a trap that many get into. So we have just been focusing on adjusting our portfolio mix and even making some adjustments to our retail footprint. So retail footprint optimization.
Understood. And then in terms of cultivate, we'll cover all the states in more detail later, but in terms of cultivation, you have cultivation only in Florida and New York, right? You don't have cultivation in Texas or Pennsylvania. And correct me if I'm wrong.
No, we do have cultivation in Texas. We do not have one. We currently do not have one in Pennsylvania.
Right. Okay. Look, before we move on, and we want to cover the various states, and obviously, Florida, a key piece in the business, more than 70% of sales, 35 stores. I'm just going to share here your brand, your latest presentation. You have your brand portfolio strategy there. It's quite an impressive group of brands you have there. If I may, just talk through the slide here. I'm sure you can see it. We see, and I think it's very interesting the way you presented, some companies, in my opinion, focus a lot on their own brands and they don't use licensed brands. I believe you have a bit of a hybrid strategy, licensed brand and your own. And of course, that may vary by states. You're looking here at premium price, value price, aspirational, accessible. Can you just briefly touch on this, on the brand strategy, which I find very appealing for your MSO?
Yeah, thank you. We find it essential to be able to address all different types of all consumer types and to meet them at various price points. So, on the top right corner, you'll see Connected in Alien Labs, which we're really proud to be launching here. We'll be pulling down in November and hopefully on the streets with at least 10 strains of Connected and 10 strains of Alien Labs in December. So ultimate premium on the quality and the price positioning. And then, center of the chart between aspirational and accessible, you'll find NAC, and that's doing really well in the New York marketplace. And then bottom left corner right now, you'll see Moods. Moods is it's a great product. Most of the volume right now is in the all-in-one, and it's very accessible. So our strategy in broad strokes is, try to have a product that meets a whole range of different consumer types and meet them at different price points, balancing price, aspirational, as well as accessibility. So, and I've listened to some of your interviews in the past, and a lot of folks talk about the importance of the brand and positioning and driving CPG businesses. We feel the same way. There's various range of loyalty when it comes to different product types, and our position is we need to continue to create these sticky relationships with the consumers, and you do that through proper branding.
Right. And just to be clear, in the case of Alien Labs and Connected, that's in New York where you're licensed, right? Where you have
Yes, that's right.
Okay. All right. So now let's move on to Florida. According to your latest presentation, 72% of company sales, 35 stores there. Just describe the operation in more detail. In terms of retail, particularly, talk about assortment, SKUs, format, brands, any gaps you plan to fill.
Yep.
How are you positioned from a price point of view, any loyalty or membership programs? Let's start with that. And one comment I'll make, when I look at the spectrum of operators in Florida, I find some that are just looking at their websites and their stores. Some are very, what I would say, oriented to what I would call the rec consumer, right? Where others still have, although it's a medical market, where others have more of a medical feel or wellness feel, right? And I'm not saying one is right or wrong, although it is a medical market. Maybe just try to position the Fluent business in Florida. And let's start with the retail side of things.
Sure. So in Florida, in the month of September, we're doing one transfer of a store and shutting down three others. So footprint right now is 30 stores. We're opening up next week we'll be opening one store and then another potentially at the end of October. But we have three stores slated, two in Q4 and one in Q1. So five facilities, about 105,000 square feet of canopy. Like I mentioned, this quarter we branded in Orlando, and then early next year, January is the target for Palm Bay.
Right. Can you go
Yeah,
on?
retail assortment. We have a few brand partnerships, one of which is, with Freedom Town and Smokies as an example. But as far as gaps go, we've done a full analysis on the marketplace, and we just see a real opportunity to close some of the gaps on that. So, for example, one of the things we uncovered, it was a blind spot for us, is we just weren't in the trim business. And in retrospect, trim is a $72 million annual market right now, based on the latest data that we can see. So we see a big opportunity to get into that particular marketplace. Whole flower, number two selling SKU in Florida is a 7-gram flower. We are not in that. So we are moving fast to enter into that space as well. Of course, we need to expand the reach of our gummies with alternative cannabinoids. We see that as an $86+ million marketplace. So 1/4 of the gummy market, which we don't play heavy in, includes more extensive cannabinoids like the CBN, CBG, CBC, where 90% of ours are just THC. So we've identified, to answer your question on voids, we've identified some opportunities to enhance our menu on that front.
And you have the production capabilities readily available to address those voids, or because in some cases people talk about their gaps, but it takes a year or two sometimes to get there because of production issues, right? Where are you in that sense? If you can, only if you can share.
Yeah, of course. No, they are operationally aligned. We before sending it to extraction, we have an easy way to take some of the ground flower, for example, and package that up. And not only is it smart, but consumers want it. They're asking for it, and we can fill that void. So that's easy, and that's coming out relatively soon. So that'll be the first one that hits the market for us.
Right. Understood. And
And
then
then,
in terms of what you can share again, Dave, you talked about, I think you closed three stores. Uh,
Mhm.
you know, any particular locations? I guess I'm just trying to understand from a Florida perspective, which parts of the state are working better than other. I don't want to call them rural, rural versus the big cities. I mean, what can you share in that regard? What's your read in that sense?
Yeah, for the most part, that's more of South Florida for us, and I think that there's probably a few reasons and a few drivers behind that. But one is that we're still faced with a heavy illicit marketplace there, so we're competing with that, and maybe we just weren't able to execute well. But when I look at our same store sales, those were the four poorest performing stores. And since we're no longer going to be chasing top line sales, we had to look at, is it accretive or not? And so these are not easy decisions, but they were certainly the right decision. The other consideration is how will the changes we're making over the last 8 weeks and moving forward impact the stores that are underperforming? So we had to decide. For example, we led a comprehensive pricing overhaul of our portfolio. It was the first major change in over 4 years. Historically, declining sales were addressed by us by increasing discounts. But inherently, you just create this barrier for entry and this eroded value perception. So, in a deal-heavy market like Florida, a consumer cutting prices, let's see here, making this strategic reset is critical for our long-term growth. And we've seen a kick up on some of these price adjustments.
Right. Understood. And then just, you've covered performance of the stores already, but, when we look at the OMU data, we calculate flower volume per store, non-flower volume per store based on the OMU data. We don't have pricing for that, right? But you are below the state average in that regard. Is it mostly because of the voids that you talked about in terms of not having, the 7G and some cannabinoids and gummies and some of the trim product that you talked about, or are there other issues also that explain that void in your opinion?
Yeah, great question, Pablo. We have been studying these averages, and last I saw that we were under indexing about 7.5% below. In August, I think we were tracking at 173. The state average was 187. So part of our under indexing was because we had the underperforming stores that we had not closed. So obviously we'll get an inherent lift from that. And then when we open up our three new stores, which are designed and placed in much better locations, we see that will lift. So some of it was just kind of fixing our retail strategy, fixing our pricing, filling the voids, and then execution. So not so long ago, we rolled out a program with seed talent, and so we're enhancing the training and the experience for the customers as well.
Right. And then just stepping back and talking a little bit in terms of what you can share your view about the overall Florida market. How has the competitive environment changed since November 24 when the ballot did not pass, right? Have you seen more price promotion? Have people slowed down the store expansion, or some people have doubled down on expanding stores? Is the market still growing based on what you see on a dollar basis? Whatever you can share there in terms of your view about the overall Florida market.
Yeah. So the medical program has increased its base from what I last saw was about 4% in the past year. We mentioned we've been focused on optimizing operations and refining our menu to get a larger market share. But the patients in the program October of last year, I think we're 886. This year in October was October 3rd was 926. So there's a call it 4.3% increase there. But there have been more store closures. It's hard. We're also facing the headwinds of hemp.
Right.
But I think about like internal and external factors. We are mostly focused on what we can fix internally, and there's a lot of opportunity for improvement there.
Yeah, yeah. And I know we'll stick to what you can control, but just again on the overall market side of things, in terms of hemp, I mean, we all read the same news, right? More than a year or 2 years ago, the governor vetoed the hemp ban, and supposedly there were going to be some regulatory changes and some enforcement. But to
Mhm.
my knowledge, the new rules for hemp haven't been fleshed out or enforced. Can you provide some color there, or am I wrong in that regard?
No, you're right, and I don't have
Nothing has
much.
changed, really. Yeah, nothing has
Nothing
changed.
has changed. We're hoping, we hope it gets on the ballot on 2026.
Right,
But there's no major changes there. But we believe if we just, focus on our business and continue to optimize it,
right.
we can still have a step change in our performance.
Right. Look, last question on Florida. And again, in terms of what you can share, you've talked about, the closing down some stores. I think opening one. I think you mentioned Orlando. Is M&A within Florida a way to expand, or it doesn't make economic sense? I don't know if you want to talk about how many stores could you have by end of this year, next year. How, do you need to add more capacity? What can you share in that regard? Again, in terms of what you can share.
Yeah. So from a capacity standpoint, we're okay on capacity because we're increasing our efficiency and our output. So we feel good on the capacity side of things. We opened up our Rosa facility. We had a bumper crop there, and then the second rotation was even bigger. So we feel good on the capacity side. As far as growing, we feel optimistic about, rec potentially coming in 2026. But we're not going to operate our business banking on that or running it on hopium. So feel pretty good about the Florida marketplace and the opportunity we have in front of us with our existing footprint.
Right. And in terms of, and again, sorry, in terms of adding stores, just stay around these levels for the time being, manage what you have.
Yep. It's not our intention. It's not our intention to add stores now until something else significantly changes. You'll see a big part of our focus is going to continue to move towards New York. It is the fastest growing cannabis state in the nation, and we're seeing incredible upside potential. And our wholesale business really positions us well
Right.
to capitalize on that.
So look, I mean, let's move on to New York then. But before we cover it in more detail in terms of your operation, I want you to comment on my comment here, right? The way I see, because sometimes people compare New York and California in terms of the potential size of the market, the illicit trade, and how easy it's been over the years to get cannabis informally, and even, still after cannabis was decriminalized in New York, a lot of stores open that were not really licensed stores, right? But forget about for that for 1 second. In my opinion, in California, you have a lot of legacy grow, so there was a lot of capacity that was available there to feed the illicit market. In the case of New York, to my knowledge, and a lot of those growers made the transition in California to the legal market, right? So you had a lot of what I would call legal license capacity in California. In the case of New York, to my knowledge, based on the data I see, the amount of what I would call licensed legal cultivation capacity of good quality is more limited, right? We see a lot of hemp farmers, a lot of people selling outdoor grown cannabis. But I find that one of the reasons the opportunity in wholesale in New York is so attractive is because the licensed legal capacity of good quality product, at least so far, is somewhat limited. I know that's a long comment on my side, but am I wrong on my read? How do you think about that?
We are equally bullish on the New York market. The way it was structurally set up, it was very much focused on outdoor grow, leaning on the former hemp farmers. And so we see big opportunity with the flower that's coming out of Chestertown as well as our Buffalo facility. So I think that I sense the demand will outpace pace supply here in 2026, which will also obviously help avoid the normal price compression you would see in other particular marketplaces.
Right.
And certainly on the premium side of things, right? That's where the, Alien Labs and Connected come in, where they tend to command the number one spot when it comes to the super premium.
Yeah.
But
Yeah. Because
yeah.
yesterday I think that the commission, right, had their monthly meeting. I don't know if it was yesterday or the day before. I listened to it, watched a video. Someone presented some slides there about, license capacity, equating demand and supply. But
Mhm.
and yeah, and they were saying that there could be a bit of a gap for a while. And they are looking at the total supply, right? And a lot of the total supply is not necessarily that great of that good quality. So on the premium side, there could be a big opportunity. So let's just expand a little bit in terms of what you have there on the cultivation sites. Let's start with that. You talk about the Buffalo facility. I understand it's going to become operational by the fourth quarter. Just more
Yep.
color. And what did you have before Buffalo in terms of growth? We're talking on the cultivation side in New York right now.
Yep. So in New York, we've had the Chestertown facility that's located in Chestertown, New York. It's 77,000 square feet. The output on that is small trim bud trim, um, mid to upper as far as a quality standpoint there. Flowering canopy, about 16,500 square feet. There's 10 flowering rooms there. And the output's pretty good. So we like that. I would say that most of that is going towards whole flower. And so call it 60% of that, 35% of it's about trim, and then 5% call it seed buds and pre-rolls at this moment in time.
Right. And that's Chestertown. In the case of Buffalo, which I think it's going to start operations by the fourth quarter, right? Facility.
Yep. Yeah, Buffalo's is really impressive facility. It's 75,000 square feet. That was built in 2024. We're actively growing there right now. Um, it- Super premium, call it, um, quad A there on that front. Um, as far as flower rooms, there's 13 flower rooms there. Canopies just over 20,000, so 20,800. Really, the facility is cutting edge, and then we're bringing in, the Alien Labs connected, best in class practices. So the expectations there are pretty high for that facility, and I'm super encouraged on many levels.
Right. And just staying in the case of New York, when in terms of your wholesale distribution, I know Buffalo production will be commercial only by the fourth quarter, but can you give us some metrics? I don't know if you have metrics in terms of brand market share, in terms of distribution coverage so far, or it's too early to talk about that because Buffalo is only coming on stream in the fourth quarter.
Yep. Well, even prior to Buffalo, we're servicing well over 100 accounts right now, rapidly growing. There's 500 active accounts in the state. So wholesale is just year over year, it's doubled, and it has great momentum, but it's still only a small portion. I'd say about 25% of our revenue relative to retail in the marketplace. So our expectations on the wholesale side are pretty high, and the numbers are supporting that.
Right. And just to be clear, in terms of obviously you have the cultivation, the wholesale business, you will supply rec. In terms of your four medical stores, are they all doing
Mhm.
rec or just some of them or none of them?
Yeah, New York's tricky when it comes to retail. So we're limited to only having three adult use shops.
That's
And so we do pretty well on in those three particular shops. Those are co-located with medical. Medical as a standalone is just really difficult. No, I'm not aware of anybody making money running a standalone medical in the state of New York. So despite the fact that we're allowed to open up eight of those, we really have the only combination that works is when medical is assigned right next to adult use, because there's some cannibalism, but B, we can cross customers over depending on their need state. So they may come in for a recreational need, or there might be a medicinal need. If there's medicinal need, then we of course can unlock a different product portfolio and some lower taxes on that front. But as far as the three stores go, on average, Our stores in New York are about 280,000 a month, so they index much higher than Florida. State average, depending on the region, can go as high as 397. So we're slightly under indexing, but it all depends on the region in which we're in. New York City is very different than, say, our Kingston location or our White Plains location.
Right. And then in terms of what you can share, how in the end did the fee that the medical operators or the incumbents were supposed to pay to the commission to enter the rec market? Because at the beginning they were talking about very high numbers on the wholesale side and the retail
Yeah.
side. How has that worked out? Or in terms of what you can share, Dave, just
Sure. Well, I think most of this is public anyway. So it's like
of
3
course.
million upon the initial issued ROD. Um, and then 4 million within the 6 months of turning on the second store. And then 4 million on the first 100 million, and then another 4 million when you hit the 200 million threshold. It's really quite prohibitive. But nonetheless, we are navigating within it, and we feel good about our position.
Right. And I know they are issuing more store licenses. I think in your presentation you talk about, in the latest presentation, you talk about like 1,900 store licenses in New York eventually. That sounds like a great wholesale opportunity, but it can also create, I don't know if that number is, I mean, the market would get saturated very quickly, but any thoughts on that, on the retail side?
Yeah, it's a great question. And I have been I've been in New York cannabis retail from the inception. As you know, I entered as an investor into a startup, which we later called the travel agency. Um, so retail in a brand new market is always has a dominant position, and then as it evolves and we get more competition, um, then the shift goes towards wholesale. So we're there. I think we're already where the puck is going. Notwithstanding, we think that our retail opportunity is still strong because we'll be able to have specific items like Alien Labs and Connected will be on our menu. So we'll continue to strengthen and optimize our menu on that front. As
Right.
far as retail goes, there's still quite a bit of illicit business in the state. So this is not, it's not every time you add another dispensary, everybody doesn't split the pie. We're still chipping away at what I would call a substantial illicit marketplace. So when they open up more stores, I think it increases the competitive pressure, which is better for the consumer, but it also puts pressure on the illicit shops. So um, we'll continue to see. There was a trend where all stores were falling, but now we've seen some trends of like stores falling out despite the increasing footprint and availability.
Right.
So,
Look, in terms of those brands that you're licensing, without mentioning one specific, but is there opportunity for Fluent to take ownership of some of those brands over time, or hard to say right now, or even to talk about right now?
um, yeah, I think that I suspect there's always that opportunity, and there's also opportunity for us to continue to grow our own house brands. So, we're gonna stay pretty laser focused on our optimizing our internal business, but we are gonna also pursue um, and explore non-organic opportunities to grow the business.
Right. Just last one in New York. So obviously, Reeve back in the day acquired the Attain business. Are any of the Attain founders involved in the business today or not?
No, they are not involved.
All right. Just moving on to Pennsylvania. And Pennsylvania in the second quarter, according to your presentation, was 15% of sales. New York, I think 13. But obviously, New York has, at least in the near term, much better growth potential. Just some color in terms of how you're thinking about Pennsylvania. You have three stores there. You don't have cultivation. Just whatever color you can share in terms of how you compare with other stores in the state in terms of revenue per store. Opportunities to expand the network there without rec. Any thoughts on that?
Sure. There are licenses retail only. So we're capped to three stores. They're all in the southeast region of Pennsylvania. These stores tend to have some of the highest average revenue per month in our entire portfolio. So like on average, $379,000 a month on a per store basis. Though we don't have a license for cultivation. gaining one, which is not out of the universe of possibilities, would enable us to not only service our own stores, but build a wholesale business.
Right. And when you say gaining one organically or also through acquisition?
Through acquisition. Through acquisition.
Right.
Yeah.
Okay. Look, I mean, this is a crystal ball question. What are your expectations about rec in Pennsylvania? Because, we've been hearing Governor Shapiro and people in the Commonwealth houses, Congress, Senate, and House talk about it for a while, but we're not there yet. Any thoughts on that?
Yeah, my crystal ball, has me feeling good about 2026. But we shall see how things nudge along there. But for us, just focusing on, running the best three shops we can and continuing to build strategic partnerships, is going to be key.
Right. Now, I'm going to move on to Texas, but I realize, again, based on your disclosure, the other three states were pretty much more than 99% of your revenue, right, in the second quarter. That said, in Texas, you are one of only three licensed operators. As you described, you have a cultivation there also. There's been some changes in the program there. Let's start, just remind us about your operation there, because we hear there's one store or online, there's cultivation, but there's pretty much zero revenue, right? So let's start with what you have right now.
Yep. We're a smaller operation there. There's two other licenses. We entered about 5 years ago into the marketplace. Currently, we operate with a smaller staff compared to other operators. Um, and the two others, Texas Original and Good Blend are down there as well. We do delivery today, but we're opening up an education and delivery center in December, and that'll be in Houston. So.
Right.
And
Now,
as far as the regulatory, again, I'm not the expert at this, but I can tell you, like the Teacup program is one of the most restrictive ones in the country. This past month, the program expanded to include a number of changes, so we think that'll benefit the program
right.
as a whole, as well as the operators. On the hemp side, we're seeing some movement towards clamping down on that as well.
Right.
Companies are now banned from selling consumable hemp products to customers under 21. They have to ID customers. In conjunction with that, Abbott announced enforcement initiatives against hemp retailers, which aligns with his recent executive order. So
Mhm.
we expect that they'll ramp up enforcement and actions against vape and smoke shops that are not compliant. In fact, we saw something here in the last couple of days on the news for that. So we think the combination of those two items, expanding the legal medical market and cracking down on some of the bad actors, will certainly work in our favor. We like Texas. We think it's a high potential marketplace for us, but others like it too. So we've been starting to get phone calls from groups, um, about our Texas license. So, and I think that's what Texas is different. And if I was to compare myself to other MSOs, we are the only MSO that actually has a license there,
Right.
yeah, in Texas. So if I was to think, how are we different from other MSOs? Like Texas really comes top of mind for me. So for example, like top of mind here would be we have a uniquely concentrated industry footprint. I think we operate in these high growth potential states like Texas. Um, and I guess another unique part about us would be we probably have the lowest public market visibility as out of the other
I
MSOs.
mean, this is probably extreme on my side to say it, but I mean, Texas right now, it's almost 0% of revenues, but could be your most valuable asset if I'm doing some other parts.
Yeah, historically, like there's been bids for our Texas license back in the heyday that exceed our entire market cap.
Right.
So you're right there. I would agree on that one.
But do we know, and again, I don't want to push too much on the regulatory side of things because it keeps changing. Totally agreed in terms of the hemp crackdown, even though partial, but it's progress, right? But in terms of how things are going to change for you on the medical side with the new
Mhm.
regulatory changes, do you have line of sight in terms of, are you going to be able to open more stores? Are you going to be able to add more formats? Are you going to be less restricted? Or it's still not clear? Because I'm hearing different things on that front.
Yeah, I think that this will it'll significantly increase the number of active patients in the program, the changes that are being made. So, for example, overnight storage, the state will now allow overnight storage, effectively allowing all the operators to maintain one retail storefront in each of the 12 medical regions in the state. So this provides easier access to the medicine. The volumetric cap has moved from 1% to 10 milligrams per dose. So that makes it possible to carry a wider range of products, including, inhalants, full spectrum concentrates, and others. And I think the third one is the expansion of the qualifying conditions. So significantly more, especially on the chronic pain, will open up the door for many patients that previously expected to not qualify for the Teacup program. This will appeal to, I think, millions of patients that have previously been using the much more approachable hemp program.
In terms of in terms of the formats that you mentioned there, inhalable concentrates, does that include vape also, to your knowledge?
Yes, it would include vape. Yep. And
But
and we're pretty well positioned to capitalize on that. So
but flower and pre-rolls, not yet, right? To my knowledge, or unclear.
still unclear. Still a lot. All of this is pretty unclear, at this point. But hemp flowers never been never been a real winner ever. So we'll
Yeah.
see. We'll see how this thing shakes out over the next couple weeks.
And sorry, one more question on the rec front. So in terms of your retailing side, anything new there? I mean, can you add another store within your region or what?
One per medical region. So we'll start with our first one in December, and that'll be in Houston, and then from there we'll look to potentially continue to expand.
Right. Okay. And then suppose there's going to be another 15 new licensees, right? But it's not even clear when those licenses will be issued and when they could become operational, right? In
Yeah,
Texas.
it seems like the last read I had on it, it was nine licenses would be issued as of December 2025.
Right.
Um,
Okay.
and then another potential three by April of 2026.
Right.
But the ramp up period, as you know, the ramp up period will take quite a
Sure.
while. So
And what I
we are,
heard,
yep.
go on, I'm sorry, go on. Yeah, the ramp-up period takes time, of course, sure. And what I heard also is that, and correct me if I'm wrong, is that of those 12, 9 plus 3, that would be that they would be allocated to Texas folks, and maybe I'm wrong about that, and that they would not be able to resell them. Am I wrong about that, or is that true? It
You
makes
might be
your
right.
license even more unique, more valuable, because you would be one of the only few that could.
Yeah. Yeah. I don't know where that landed, but that was the direction in which it was heading for sure.
Right. Okay. Wow. Interesting to talk about a company where, we discuss so much on Florida, New York, and again, congrats on all the progress you're making there. And that's the financial upside, right? But from some of the parts, Texas, that license, because the other one, Texas Originals, is a private company to my knowledge. I know there's some private equity shops from the cannabis side that are involved in that company. And then, of course, the other one is in the hands of Parallel, right? Which is
Mhm.
Sunstream, SNDL indirectly.
Yeah.
Anyway, so that puts you in a good position.
So, and I further comment on Texas, when I talk about our geographic footprint, as compared to other MSOs, like it's highly concentrated, but from a population standpoint, we're in four of the five largest states in the country, and which is approximately 25% of the US population. So we think that's important on many levels from a brand building perspective, from a cultural perspective, and we think New York is obviously going to punch above its weight for quite some time here.
No, agreed, of course. All right, now let's talk about the balance sheet of Fluent. Any color you can share there. We have access to the financials, of course, but any large debt maturities coming up? How does your balance sheet compare with other MSOs, in your opinion? Any color you can provide in terms of CapEx and free cash flow outlook. Thank you.
Yep. Yeah, probably more limited on this one here. Our debt is with Chicago Atlantic that matures November of 28. There's also additional credit line in there, 10 million. It's undrawn, but there's some availability to it. Um, how do we compare does that answer that question for you?
Yeah, that's good enough. I'm not gonna. The only point. Okay, that's good. That's good. And in terms of future expansion, you have a lot going on with those four states. You talked about maybe going vertical in Pennsylvania on the cultivation side. Is entering other states through M&A also part of the strategy or not for the time being?
Um, so we're open to it. It's one of those fix the core and then add more for us. So regarding, expansion for us, growth in New York is particularly focused on wholesale. Like that's where we're laser focused. Texas, we think could have huge potential, been pending this finalization of the regulatory guidance. In Florida remains challenging due to the stagnant new patient numbers and continued price compression. But we have strategies around price compression and some of these other external issues. And then we just need to continue to stay relevant in that state, and we see a great opportunity to improve our position there. And then Pennsylvania, I think the growth is dependent on the state going rec and us finding suitable M&A.
Sure. Okay, look, here I'm going to read other. For those of you listening in, you can email me the questions or put them here on the chat box in Zoom or put them on the X bubble also. Um, One question for you, Dave, it's what's the role of Scott's Miracle Grow, right? Because I think that, back in the day, we heard a lot about them through Hawthorne and Reef Capital, and then it seems that they are still involved, right? And from my perspective, that's a strategic asset for Fluent. But what can you share in that regard?
Um, yes. So they have since divested their investment, but they remain a friend and a strategic long-term partner in the business. So I guess I'd say that they continue to be supportive of like the industry and the company. And although they don't have a direct share, Chris Hagedorn is a board member of the company, and due to his lengthy history in the industry, he continues to bring a lot of strategic and operational value to the board. So um, they're friendly, and we like having them
Right.
our side.
And in terms of what you can share, I mean, sometimes when we look at the ownership structure in FactSet, it's not always up to date. Can you give us
Mhm.
an update in terms of what's the shareholder structure of Fluent right now?
Yeah, that's one thing I probably can't dive deep into. In my first 8 weeks, I haven't had a chance to peel that one apart. So I don't think I can give you an intelligent answer that would be reliable.
Okay. Here I wanted quick questions, quick answers. Someone asking me, is the company name Fluent or Consortium? I'm sorry to.
It's a great question. Uh, so we operate, our banners are under Fluent. Um, Consortium was the company name, but I think everything's been essentially rebranded under Fluent. And I apologize for the multiple names. I know that's a thing. But yeah, from here on until further notice, we will operate under Fluent.
Right. Okay. Look, again, I'm gonna read questions here that I'm receiving by email, right? Uh, does the company plan to buy back some shares? Again, in terms of what you have said publicly, how do you think about that?
Yeah, I've seen other companies do that, and I like it. It's certainly not, I don't think that would appear to be the best use of capital for us. So at this current moment, we don't plan on buying back any shares at this point.
Right. I know you talked a lot already about the wholesale New York market opportunity, but
Mhm.
someone is asking me, are you going to need new resources to fund that growth opportunity? Or it seems that you have the facilities and the capacity to satisfy the demand, right?
We do. We've established a really solid footprint for our wholesale business. We've got a very experienced leader. We have territory managers. Territory managers are supported by brand ambassadors, and we've got pretty really good relationships throughout the entire state. So at this point, we're not anticipating to need any additional CapEx or additional infrastructure to properly service the connected and alien labs.
Right. Again, I'm reading questions that I'm receiving. Obviously, we filter them, right? But someone, and I know you cannot speak on behalf of Scott's Miracle Grow, but someone is asking whether SMG plans to re-enter cannabis via Fluent if Schedule 3 goes through.
I don't think this is my opinion, but I don't think it's their intention. I think that there's a clear line between what SMG does. Um, and it's not plant touching. So I don't think it's their intention to re-enter the cannabis business as the caller might be asking.
Right.
But I don't represent
No,
SM.
of course. Look, I'll make a comment and you can comment if you want. But what I'm surprised is that Jim, right, the CEO of SMG, he's often quoted by the trade press and financial press making comments about cannabis, right? He seems to be close to President Trump, and he's made comments publicly that he still thinks that rescheduling is going to go through. So just I don't know if he's speaking at a personal level or SMG level, but they seem to be quite bullish on S3 happening. Anyway, it's a comment on my side. You don't have to
Yeah.
go.
Yeah, it does. If you read it, it does seem quite bullish. And all the information we're getting too is that we've never been closer to rescheduling. So I think that this may be our year. And but we've been talking about this for many years. I entered the cannabis sector in 2016, right? So um, as long as we continue to focus on driving our business and optimizing our internal business, we'll be fine. But there'd be a couple, clamping down on hemp would certainly cut down quite a bit of the headwinds. The elimination of 280E would also be an incredible windfall. We are not building a business around those two elements, but they both seem like they're in motion. So we might have
But
some good luck.
I mean, not to push back, but if I look at the Truth Social video that the president reposted, right, that they talked about the endocannabinoid system, right, about CBD, but that also came, from my perspective, came from the hemp lobby, right? So I think that the idea they're going to ban that, at least at the executive level, I don't think they're in favor of banning hemp.
Yeah, I thought that was ironic, but that's okay. It's still progress. When the president puts out a video like that,
Sure.
it is encouraging on many levels. We didn't take that we didn't discount that at all. We figured this was a step in the right direction.
Look, and again, just going back to Fluent, someone is asking a question that I'm not so sure you can answer, or maybe you can try to answer, but people are very excited about the Alien Labs relationship, the opportunity in New York. Could you also pick up the license for that brand in other states, right? If I'm not wrong, I think Trulieve is a licensee in Florida, right? But what can you share in that regard?
Um, What I can share is that we have a license in New York, and that we are just laser focused on executing that. And we would welcome an opportunity to expand in areas in which they don't have commitments. Florida, they do have a commitment. So I can't speak to that. But they consistently rank number one in the premium flower sector. So partnering with them, having a premium offering with aspirational pricing that consistently delivers on incredible flower would be welcomed in our portfolio throughout the enterprise.
Right. Okay. Thank you very much, Dave. Look, I mean, I know we're going to be running out of time here, but look, someone is asking me a question that, again, I don't think you have to answer unless you want or you see a benefit in answering. Outside of your participation in Fluent, right? And I believe you are a shareholder in Fluent. You want to talk about other investments you have in cannabis, but you don't have to.
Um, yeah, I don't, based on the regs, the answer is I don't have any material investments in other cannabis businesses.
Right. Okay. So let's finish, the conversation here in terms of your pitch to investors. I think obviously you provided a lot of color. I think all it speaks for itself, right? But among so many MSOs, why should investors choose Fluent, and provide color on any valuation argument you may want to use?
Yeah, I think that if I was just to start from a baseline, what makes us different? I go back to we have a concentrated industry footprint. And so, we're really focused on where 25% of the US population is. So we think that's important. Number two, we operate in these high growth, but more importantly, high potential states, right? So, our concentrated footprint has more. I sense it as more regulatory catalyst on the horizon than most MSOs from a concentration standpoint. So, in New York, we're in the middle of a tremendous inflection point. Last data I saw was 106% year over year on the adult market side. In Florida and Pennsylvania, we have direct exposure to very well-established markets and possible adult use on the near horizon. So if I was looking from an investor's perspective, I'd say, well, these guys are playing in the right marketplace. And Texas, we talked about as well, right? So we're the only pubco company with a license there. Um, and if they continue to crack down on hemp and expand the reach, we should be in good shape. And then also, if I was an investor, um, like if you run the numbers, this is not a flex, but despite the fact that our retail store count is ranking at, within the top 10 of MSO peers, we tend to operate with very little public market attention. So I noticed in one of the comments you're asking about price per share. Um, from an investor lens standpoint, I believe the company is undervalued, but that's my perspective. In fact, you can see in the public records, I personally purchased on my first month 3.5 million shares of the company when I assumed the helm. So if I was to benchmark against MSOs, we currently hold we hold the lowest market cap to revenue ratio. So it's embarrassing, but maybe that's a sign that there's some upside, provided our leadership team can continue to execute on all the changes that we're making.
Okay. Look, I'm going to add two more questions here, Dave, if you don't mind, that came through
Sure.
email, but only, again, up to you if you don't answer them. From a probability perspective, it seems that you're more inclined to sell the Texas business than to actually make the investments. Because if the medical market develops and grows, maybe it would require heavy investments. But I don't know any thoughts you want to give there. And again, you don't have to answer.
Yeah. You know, We weren't looking to sell the Texas license. We just have had multiple conversations of people expressing interest. And so it's one of those scenarios where it apparently is one of our assets that continues to grow, maybe by the day, but by the week and the month, it seems to be getting more and more interesting. So other large companies want to access it. It doesn't mean that we'll sell it. It just means that we're going to explore those particular conversations.
But
It's we don't know. It's a great conversation, but it is getting exciting, and we are really proud to have it in our portfolio.
And like you said, I mean, we still don't know exactly what the regs are going to look like, right? So it's we have to get clarity in that front anyway, in terms of regulations for the medical market. I mean, it's not 100% clear how it plays
Yep.
out. And last one, someone asking on the Hall of Flowers side. Obviously, New York Hall of Flowers took place yesterday and today, and today also. I understand you were there. I mean, and again, I'm paraphrasing the question I'm getting. When we go to these Hall of Flowers events, we see a lot of brands, right? And I think in the case of New York, there were a lot of brands being presented, but a lot of those people, you wonder if they have the capacity to supply them at large scale, right? So yeah, I don't know if you want to triangulate that question there, but how did you go for Hall of Flowers for you? What was the feedback on the brands that you presented there? And oh, by the way, yeah, there were a lot of people presenting brands, but do they have your scale to be able to satisfy the demand potential for those brands?
That's right. To win in the markets, right? It always takes the will, the skill, and the resources. Several months ago, we had extra flour. We were selling it as bulk flour. We don't have any extra flour to sell. So we are now converting everything for our wholesale business. So I think that I feel for these brands. A lot of these brands are actually not brands. They are just labels. And they put their label on someone else's product. So that won't be sustainable for many of the brands. And so from a supply, being vertically integrated certainly gives us an advantage and an assurance on the supply side. We have the ability to flex up and down with our retail operations. So in the event that we don't have enough supply, we can certainly buy third-party supply for our retail operations. But yeah, in New York, everybody wants to be here, and I'm proud of that. I'm a New Yorker, and I'm glad to be here. So there's well over 500 brands in New York, but the ones that'll win in the end are going to want are the ones that do the hard work, and so they're going to have to do the effective brand building. They're going to have to create relationships with retailers. They're going to have to build stickiness with the consumers. They're going to have consistent supply. So lots of brands. Unfortunately, most of them won't survive, but we feel pretty well positioned because we're vertically integrated.
Right. Dave, I want to take advantage of your time here. I mean, I have one more question that came through, and again, answer only if you want. What did you learn from your experience with Origin House? What went wrong? And it seems that there is room in a state like New York or even California for distributors, right? We've seen the case of
Yeah.
Navis. But any color you want to share in that regard?
Sure. Yeah. Origin House obviously was a very great, it was an awesome experience for me. And, I was lucky to have Mark Lustig as my mentor on that. I joined in the end of 2016 as frankly the first executive. I was fortunate to gain some equity from the beginning, and we built a pretty substantial business. And what I learned on the Origin House side of things, building that infrastructure, and it's the same thing that I carry through to this business. And I got back into this because I love it. I love the plant. I love the business. I love the challenge. But it always comes down to whether it's cannabis or something else. It's always like people, processes, and systems. And so I think in California, what drove our success and resulted in one of the largest exits in 2020 was that we were laser focused on our people, process, and systems. We built an infrastructure. We tried not to make the same mistakes twice. Every time we ran into an issue, we did root cause analysis. And that's exactly the work that this leadership is doing right now. We're peeling this apart, and we are unlocking incredible opportunities for step change in the company. So we're excited to see how they will implement in the weeks and months ahead. So
Yeah, no, that's great. So look, Dave, thank you very much for your time here. I don't know if you have any closing remarks that you want to make here, but again, all very clear, and we appreciate all the color you've shared on Fluent.
yeah, I know from a closing remark standpoint, I appreciate the time and the exposure. I mean, in broad strokes, like we have less visibility than most cannabis stocks out there. And maybe at one point, like that was a good thing. But as we continue to implement our go forward strategies and like focusing on the fundamentals and being customer centered, cutting costs and driving profitable growth, I think that Wall Street will respond positively. So we're not going to manage around Wall Street. Wall Street will be a reflection of our execution. So we're just going to continue to remain laser focused on executing.
That's great. Okay, thank you very much, Dave, and thanks everyone for joining us today. Everyone, have a good day.
Thank
Thanks.
you.